Hey everybody, morning George, morning Lucero. I don't recall seeing your name before. Welcome, if you're brand new. If you're not, well, welcome anyway. I don't recognize your name. John, welcome. Francois, Arturo, Valerie, Michael. Every morning, you guys, Michael. Jazz, Michaels. Anyway, that's why it makes me laugh is the, was it Blades of Glory movie? Anyway, yeah. Let's see, move my monster in the right spot there. There we go. Hey everybody, power went out yesterday afternoon, messed all my studio equipment up, so hopefully everybody's got me on audio and video and everything's good. So, Maurizio, morning. Whew. All right, moving on. Moving on. Let's go ahead and do the disclaimer. Hey Kevin, hey Bill, morning everybody. Al, morning. All trading involves a substantial risk of loss. All right, let's be serious. I may be full of crap because past performance is not necessarily indicative of future results. I mean, everybody out here, things that worked in the past, let's be honest, they may not work in the future, but some things tend to happen over and over. So, this presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise, no subscriptions, no nothing. Don't buy anything. You can come here for free. If you desire personal financial advice, hire and consult a financial advisor. All right. When you hire them, they have a fiduciary duty, at least in the United States now, they have a fiduciary duty to give you advice based on your situation. Now, with all the robo advisors and stuff these days, I don't know what your experience is going to be, but yeah, be careful. All right, we'll talk about it, Mark. So, didn't understand the reaction to jobs data. You have to understand the numbers are all made up. You know, it's kind of like Whose Line Is It Anyway? If you've never seen that show, you know, the points are all made up. The prices don't matter. You know, it's a whole farce. That's why news doesn't move the charts. The charts move, and if the news just happens to line up, then the mainstream media picks it out and goes, hey, you know, we had a positive jobs report and the market went up. And then, lo and behold, the next month, we had a positive jobs report and the market went down. The market just did not like the jobs report. What? Come on now, let's be serious. The jobs report didn't move the market. But let's talk about what we had. So right here today, 8:30. This is Friday, July 7th. We had average hourly earnings coming in 0.4%. Hey, Bidenomics, that's big money, right? Everybody making more money. Yeah, right. Inflation eating us all alive. The BLS even says that we're not making the average hourly earning. The average hourly earnings have gone down since the current administration took office. So we're having non-farm employment change, and yes, that is showing a job loss. Oddly enough, opposite to the ADP numbers yesterday. Let's pull this over. There we go. Coming in right in line though. Almost right on the money. Expecting 224, got 209, just slightly under the gauge. These are different reports though. ADP yesterday. Where would it? Oh, I scrolled right on through. ADP yesterday, 497. I think we all know it's a farce. 500,000 jobs added? Yeah, right. I think that's where. Hey, Diesel, hey, Pat. Morning, everybody. Glad to see you. You know what? If you're new to the stream, you've maybe this is the first time watching, you're like, how is he talking to everybody? All you gotta do is be a subscriber to the YouTube channel. The button's like right over that way on the far side of the screen. If you click that button, subscribe, a few seconds later, boom, you're able to chat. The live stream thing comes up. You should be able to see the chat anyway, but if you want to be able to chat, you just got to be a subscriber. I did that so the bots leave me alone. And then while you're at it, there's a bell down there at the bottom, down there wherever. click that, click the little doodads, and if YouTube thinks this is something you will watch tomorrow or Monday, tomorrow's Saturday. If YouTube thinks you'll watch it on Monday, then you'll get notified when I go live on Monday. And then Tuesday, I go live 2 times. So do a morning show and a request show at 5 p.m. So you want to make sure that you're subscribed and make sure you hit the bell so you get alerts. Morning, Val. Morning, morning, everybody. So glad to have everybody. And we're talking about the jobs report today. What's going on? Caused a little volatility. But if you didn't notice, we're in a little bit of a correction here. So unemployment rate still hanging out at 3.6. We estimated 3.6. I don't know. I mean, is that accurate? Think about it. How many people do you know? How many people are looking for jobs? How many? Do you know anybody that doesn't have a job? Do you know anybody that got fired? Do you know anybody that quit? Think about it. Do you know anybody that's been through like 5 or 6 jobs in the last year? I might know somebody like that. At least one. So, hey. Yeah, Zuber, if you're in full screen mode, you cannot see the comments. You got to kind of be in the mode where it depends on the thing, you know. If you're in full screen on the computer, you certainly can't. If you have a nice tab open with the window and then the chat's next to it on desktop. Mobile, you kind of have to usually turn your screen sideways a little bit, and then the chat pops up on the side, or it's down below on the vertical way, and it's different on every platform. Morning, Ben. Glad to have you. Yeah, Jeffrey with no E. That's exactly right. My mom apologizes. She didn't know Jeffrey's supposed to be with 2 E's. So she just put 1 in it when she filled out my birth certificate. So there we go. There's non-farm employment change. Well, I don't know. So all those jobs are apparently in farms, I guess, from ADP yesterday. It's all the farmers. Because the non-farm was down. I don't know. It's all a farce. It's all, whose line is it anyway? The numbers don't matter. Everything's made up. So let's actually talk about something that matters. Hey, Goose is back with a brand new recertification. Glad to have you, Goose, as always. So yesterday we turned down back below. I was mentioning yesterday, was this a fake breakout? Was this the breakout we were looking for, or was this a fake breakout? I don't know. On the daily close here, this is a very simplified chart with just looking at the daily close. We're kind of breaking back below. We could see that further decline. Still looking for the 3+% pullback, because as we've talked about for my charts are all messed up now. I would pull it up, but as we've talked about, we're in the 85th plus maybe 87th now percentile of bull runs since World War II. Like, this bull run has lasted longer than 87% of the bull runs that we've had since World War II, without a 3% pullback, or 3% or more. 3% is kind of the standard. We get hundreds of them, thousands of them over the course of hundreds of them since World War II, and we haven't had one since March 13th. We bottomed out back there, and we've been on a tear, and we have not had a 3% drawdown in the S&P since March 13th. Now, the average, this, like JT, how often does this occur? Well, on average, it occurs every 47 days. The median is 38 days. A statistic, median mode, mean median mode. So the average mean is 47 days. The median is 38 days. We're running at 70, almost 80 days, 80 whatever days off that low, almost 3 months on the calendar. This is something that's going to happen. Now, we can just push right on up here. This is entirely possible. The breakout, the patterns I watch, we popped up, we hit the 1272, we pulled back right back to the 100, right near the 100 zone, right where we kind of topped out before, and pushing out to the 1618. Entirely in the realm of possibility. But if we go ahead and do that, the pullback's going to be big and it's going to be rough. All right. Just want to keep throwing that out there. I keep beating the drum on it. We've talked about it ad nauseum. And please be careful. I don't know if Goose is smarter or just his brain's fried from talking to the feds on the check ride. Anyway, here it is. This is what a 3% pullback looks like. And I should flip it so that we can talk about it from over here. 3% would be right down to about 39.30-ish. And if we get a 5%, which several people think we might get a 5% just because of how high we came, how fast, that would be down here to 42.50. And if we came down and hit the roadmap line, that would be like a 7.8%. And be like down to this 41.50 area, which we left some missed pivots down there. So that's a 7.7% pullback potentially in the cards. So, yeah, the public's memory is just 39 days, says PD. Yeah, so you got to be careful. Hey, Sledge, morning, buddy. Glad to see you. All right, so here we are. Now, this one, I talk about this often. You know, we just got a little flash right here. Now let's zoom out just a bit and talk about what we have going on here. This is SVXY. This is short VIX, so it's inverse VIX. You know, think about VIX. You know, you may or may not have heard of VIX. VIX is a volatility index. It tends to spike when we get fear in the market, and a lot of people say it tends to spike when we get drops in the market. Well, people get freaked out and fear comes in the market when we drop unexpectedly. So we look at this would be the COVID pop in VIX, which was a drop in something that's inverse. All right. Now, why do I use this one? Because a lot of the other derivatives of VIX tend to decay. This one doesn't decay. This one tends to go to the moon because VIX is always coming back. Like VIX is always dropping. So this one makes money off of shorting the VIX. And about every, the longest period in here, I think, was 77 days before we got a 15 to 20% pullback. I highlighted all these looks: 15%, 24%, 17%, 13%, 16%, 16%, 14%, 14%, 23%, 22%, 21%. There's a 16%, 18%, and a 33%. Oh, that's a pop, 33% pop. That's where we are currently kind of grinding up higher and higher. And I don't have it to the top there. I need to zoom back up so we can actually talk about it. So 77 days seems to be about the longest we've gone without getting that 5% pullback. And you know what? 15% pullback. You know what? Right now we're kind of on this pullback. There we go. Filled it back out. Need to save it. 76 bars. We're dropping, but was that all the drop we get? Now 15 to 20% pullback. Put it all the way up to the top. That would represent something like down to 74. We got close yesterday with that drop. That was a mere 9% in SVXY. So 15% down here. We saw some 14, so somewhere around 74, 75. And if we got that 20-ish percent, 70. If we got a little extra, 68. It looks like the market just opened up. Yep. So be careful. I don't think this was all the pullback we're going to get. Now, it may grind higher, get us another few more days, set a new record length since COVID, and then we get the bigger pullback. So just be careful. How many times leverage? You'll have to go look that up. Pro share short. I can't remember how many leverage times it is, but it's probably a triple leverage, maybe a double. Be careful. Leverage cuts both ways. I'm not saying to trade this. I'm just saying keep an eye on it. Usually after we get the 15 to 20% pullback, I go long this one and ride it back up because it snaps right back up in a repeatable pattern. Gambling for the drop, that's gambling. Trading it, getting into it long after the drop, shows that it's kind of bottomed out, and the S&P's kind of bottoming out, and the fear's kind of chilling out, and riding it back up. That's been a smart play. You can make pretty good money if you just wait for the drop. So that's the way I play that one. All right, S5FI, the stock's above the 50-day moving average, and for whatever reason they moved my button off for the logarithmic here. I need to turn this one off, log. Now, we are up, hanging out at the upper end of this range. We typically hang out between the 20 and 80. This is stocks above the 50-day moving average in the S&P 500 right here. We typically hang out. And my guess was, I mean, look at the arrows I drew. Gosh, when did I draw those arrows? January? Well, I mean, we popped up here. We didn't quite get that high. We pulled back, and then we're right back up here. We may just hang out near the top. That could happen. Now, usually if we poke out the top, we get a deeper pullback. So please be careful. I'm kind of thinking that this here may have been what I was expecting back here. Instead, we went down first and then back up. We may pull back before we can just kind of hang out. I think we need the pullback, but it doesn't matter what I think. The market will do what the market does. All right. NDFI. Okay. NASDAQ 100 stocks above the 50-day. That's 100 stocks, right? How the devil do you have 73.26% of 100 of something? It's either 73 or 74. I don't know. Whatever. Somebody's cooking the numbers. So this one's been hanging out right at the top for a while now, and we may see it pull back down here to the bottom. Big tech feeling a little cooked. And that brings me into... Let's segue right over to a chart I brought and talk about it in a minute. So right here, aptly labeled Fed BS. Yeah, that's balance sheet, not bull chart. Anyway, historically, big tech has been following right along the Fed balance sheet. As the Fed decided to lighten up, tech kind of led, and then they were like, "Oh, we're gonna, banks freaking out. We got to add back," and then tech launched off, but then you know what? They started reducing their balance sheet again, and now we have a discrepancy. Is NASDAQ going to roll over? I don't know. This is something to keep in mind, though. So this correlation, correlation is not causation, but this correlation has broken down at this point. We're making lower lows on the Fed balance sheet, and NASDAQ not cooperating. So all those that say that big tech is held up by the Fed balance sheet, not currently. So we're looking at $8 trillion on the Fed balance sheet versus NASDAQ rallying here. Zooming out to the S&P 500 3-day chart, I put this big white arrow on here back in January, and that's kind of what we got playing out. We may come up here to this 3. Of course, it could be the C. That's the big question mark. Is this a corrective pattern, or is this a bullish pattern with continuation higher? That's why I'm cautious right now. We need this to clear up, and we need a pullback to clear this up for us. So I'm just kind of like, glad you like it. Now, another thing I've been talking about was this chart right here, how crude market was 2.1 trillion. Now look at the value of our largest 100 banks here. Chase Morgan coming in at 3.3 trillion. Bank of America 2.5 trillion. Citi 1.7 trillion. Wells Fargo 1.7 trillion. Wells and Citi almost the same size. Then you've got the next tier, and then we start dropping on down where we have TD Bank, and then we're getting down into the regional type suckers down here, and we drop all the way down where we have these micro regionals, and we got some outliers like Discover Card or Discover Bank, and First Republic Bank is bust. So Regions hanging out there. I've got an account at Regions. So there you go. If you want this, just ask for me. Ask for the link in Discord. I'll throw it to you after I'm done. But I just think it's interesting to keep in mind how large a certain market is. So the financial market has a lot of money tied up in it. I think this is $12 trillion, roughly 11, 12. It's hard to keep up with the exact number. It says 18 right there, but we lost a couple trillion on this whole removal of deposits thing. So be careful. The top 5 make over half of the value. It's kind of like the crypto market right there. So, and then we talked about this yesterday, how gold price and the U.S. debt. Gold tends to track the U.S. debt as the dollar inflates away to zero. Circling back to the charts, ES, showing, we found support at the support level yesterday. I spelled out the support levels, and we kind of held that, actually. And bounced, came up, but we're kind of holding the roadmap line here. We held under the 30-minute roadmap line. Roadmap line works on all the time charts. If you want to get this on your chart, links in the description. Join the roadmap for like $5 for $5 for 3 months, 5 months for whatever. 3 months for $5, and then you get like an upgrade offer for 20 for another year. So it's like 15 months for $25. Pretty good deal. And I'll give you a chart. I'll give you a list of potentially bullish setups every week with a video explaining what we're watching. So this right here is looking a little more corrective. This was kind of bullish looking going into the close yesterday, but then this morning, not as bullish. Now that was a higher high. That could have finished that bullish move up. Then the correction. So this could be a little baby mini 1212. It's a 618 retrace right there. And this can launch off. So be very careful right here. Know when you're wrong. Remember, it's not being wrong that costs you money. It's staying wrong. All right. So this right here, target would be right up here above the roadmap line before we get the next pullback. Right up in this zone. Then the pullback becomes more likely. So in the micro time frames, it looks like we might go up. Can you buy the chart through my website? What chart are you looking for? You're looking for the roadmap line. The link's in the description. Right on the video. Right, just click the description down there. NQ, a little volatility this morning, and this one didn't make a higher high, while ES did. And if you're not familiar with ES and NQ, those are just the futures. I'm using them because they have overnight data, whereas the S&P 500, there was no overnight data. We just gapped around. So I like the complete picture provided by the futures. So we're getting a big green candle on S&P 500, the actual cash index, but that's not the rosy picture we're seeing on the futures. So I like to use the futures because they provide that overnight data with the more complete picture of what we got going on here. All right. So moving on to Russell. That one actually looks more better, more bullish. Looks like we may rally right back up to the roadmap line and test it on the 30-minute here. Oil, let's pop up to the daily, kind of check this one out. OPEC meeting should be wrapping up. I didn't hear any news whether they're cutting or raising or anything yet. So no news, maybe good news, and we're kind of trying to break out of this wedge. We'll see. I expect a little more volatility to crop up here on oil. Potentially breaking out, but we're still below these highs until we get above, until we start making higher highs. We haven't even made a higher high than here, even though we're out of the downtrend. Be careful, all right? GC, still holding the roadmap line, still looking healthy, and just need that move up through 1950. Then it's time to start looking for positions on gold. Bitcoin still consolidating up here. Tried to break out, couldn't do it. My target up there, 32.8 at the near term, and the bigger term, looking for that 36 move, potentially even up to this 39 area, $39,000 and $40,000 a Bitcoin. This thing's going to be bullish, more than likely. This is a bullish consolidation for, and let's talk about it. Probability-wise, it's highly likely to get one more spike up here and then get a deeper retrace. I mean, that's just, after doing that, consolidating right here, a pop-up, tag that, and a pullback. That's what's likely to happen. And it may very well happen over the weekend when we're not able to do anything with it in the regular stock market. So Ethereum is not as bullish. It is not making those higher highs. It is holding that 618 and giving a high probability to roll on over down here. This is a different pattern than what Bitcoin's got going on. And if you remember crypto power plays, I'll give you the whole update over the weekend. DXY turning down, probably going back to the 90s, the mid 90s. Can we finally get that drop out? This is a bearish pattern right here. Look what we did. We held the 618 level. That puts us on a potential extension to go lower. Right there, right there. Go off the, yep, right down to the arrow. Perfect target. So right down around 100. And if we get the extensions, maybe down in the 90s, mid 90s would be the bigger pattern target. So still expecting lower on the dollar index. Stuff actually moving today. PWM, look at that crazy candle. You know, only got 2 candles and can't do anything with it. Prestige Worldwide, Prestige Wealth Incorporated, nothing. HKD, nothing. That's a nothing chart. BABA, look at this. Why do you want to put your money into something like this? I hear plenty of people talking about BABA, but look at this nasty, gnarly chart. It tried to break down, rejected, and this is just a big watermelon seed squeeze play right here. Look at that thing. Can it break out? Sure, it could break out. Is it likely to keep filling out this triangle? Yeah. Don't mess with garbage. That's garbage right now. It's under the roadmap line and doesn't look bullish. Don't chase it. I don't care who's pumping money into it, whatever. Jack Ma quit being the head of it, and they're talking about breaking it up. And even though I've got an order from AliExpress coming today, I'm not overly bullish on BABA. So Rivian breaking above the resistance. This is an interesting development right here. How high can she go? Probably going to come up here and test the 27 area. See where these lows were. That was the 618 from that move, where we found lots of support. And we may come back up and test that zone. Now, what does that mean for the current trend? Yeah, that'd be the one, like right there. 24 is the 1272, and then 28 is the 1618. So those are the levels of resistance right there, and right there on Rivian. They don't make any money. I mean, even though they beat right there, look how much money they lose. They consistently lose tons of money. They don't sell many vehicles. They're expected to continue to lose money. Money's getting expensive. Be careful on this stock. All right, I don't care what kind of hype people want to talk about. This thing could go to zero, could be bankrupt any day. All right, TGTX, that's a biotech pharma thing. These things don't always move on my patterns, but this one looks likely to come back to the roadmap line and kind of have a little meeting with the roadmap line there. And then we find out if it finds support or if it breaks back above. This high right here could go out to 39. Oop, move the fibs instead of the chart. 39, possibly 44. BIIB. That's a biotech. Be careful on biotechs. I don't know how many times to say this. Biotechs are dangerous. This one can just go fill the gap back down all the way back to 200. SPY was on the list and just kind of churning here at this extension of the last pullback. So this is a little different than the other chart I was talking about earlier, because we're just looking at it based on the roadmap line. That's the roadmap line target. Pulling back to the roadmap line would be the next expectation. That's why I keep talking about expecting a bigger pullback in the market. Several things, kind of like different ways to look at the same thing over and over. All right. CSTL, Castle Biosciences, medical specialty, biotech type stuff. Be careful. Doesn't always follow. These guys announce a drug and it goes to the moon. These guys announce that the FDA shut them down and they plummet to zero. be careful. That's the way biotechs work. NUZE looks like garbage. That is a hot garbage chart right there. Dumpster fire. I would not chase that with your money. That is a garbage chart. I don't know what the company does. Doesn't matter. Garbage chart. That one right there, another one. That just sideways, nasty chart. Don't trade that stuff. Gorilla Glue. I mean, I don't care how great you think Gorilla Glue is. The chart looks like a horrible piece of garbage that can easily go lower. Yeah, obviously, maybe great at making glue, not great at managing a stock price. Right there, looks like garbage on the chart. Top, yeah, another garbage chart. CMPS, Compass Pathways PLC, American Depository. This is just chopping in the range here. Probably going to come back up near the top of this thing. It's making lower highs. A breakout could potentially take it back up to retest the top here. Not seeing uber bullish. These things were all moving pre-market, but that's not looking super bullish here. So let's be honest. MSTR. What stock is MSTR linked to? MicroStrategy is a stock. That's a company. They hold a lot of Bitcoin. They don't hold more than the US government, but they hold a lot. So as Bitcoin goes up, or these guys get hypium, they go up. So this is right there, 394. But they also, if we go look at what they do, MicroStrategy, technology everywhere. So they sell some software that does some cool graphs and stuff, but they also hold a crap ton of Bitcoin. And Bitcoin's why they move. So they're kind of a proponent of Bitcoin. I mean, you can look at their website and they have some cloud services, consulting services, some customer solutions, retail. Why would you jump into it? I don't know. Really, they hold a crap ton of Bitcoin, and that's why the stock follows crypto. So, largely they're a SaaS. I mean, they're kind of a SaaS, but they make a crap load of money off of holding a bunch of Bitcoin, or maybe they make their money on SaaS and then buy Bitcoin with it instead of reinvesting in the business. I don't know. I don't know their management strategy. All I know is they hold a large chunk of Bitcoin and they move like crypto does. 394 was the current target, and I've been talking about that for a few weeks. So be careful when we get here. We can experience a pullback similar to what we saw before. And that's what I got to say about MSTR right now. Update more on the Crypto Power Plays update for the week. BE. That looks like a horrible garbage chart. Look at that. I mean, that's just down, and lower low can easily happen off of this. We break below 1475, probably come down to 11. PLTK, nice pop, right into resistance from before. If we can get above that, we can go on an extension. The extension would look something like 13, maybe 14. JOBY. This is a bubble chart. I don't care what they do. I guess they make that little, it's like an EV drone thing for people. Anyway, this one likely to come back to the roadmap line. They're not. They make any money. They don't sell anything yet. They're just making prototypes. Could be a big one, up and comer, but right now, highly likely to come back to the roadmap line. Can stay irrational forever though. EDTX. Looks like a nasty, gnarly chart. Yeah, likely to go bankrupt. That's what I thought too, Goose. Levi, ouch. This is why I say don't trade, don't go long under the roadmap line. Look at this. We can go lower. Expected it to go lower way back here and still expect it to continue to go lower. The extension on this move would be down to 12, possibly 11. WBD, that's a, God, come on, get your crap together. Don't blow up the Discovery Channel. I would like to see this one break out, but these guys bought a bunch of crap and they keep losing money instead of turning it around, making profitable. I hope they don't have to liquidate and get rid of the Discovery Channel and Food Network and all that stuff, and sell it off to Disney or something like that. Be careful. This looks like a nasty pattern. If we break down, we're probably going to go back to lows right over here, at least, if not going lower. PARA looks like that's on the way down. XPEV, that one might actually, it's probably reaching targets. Yeah, way extended at the 2618 and might come back to the roadmap line and set up for another pop. Dust, 2x gold 2x bears on the gold miners as gold pulls back and the miners pull back. Remember, the miners don't always move with gold. Outperforming to the downside compared to the gold chart. These don't have to pop as gold rises. So be careful trying to chase things. But dust right there, kind of sitting in the roadmap line, not breaking up. That can be bearish. That can go on down and get another one of these. I'm sure this has a reverse split back here somewhere. WD. Yeah, they got a strike too. I mean, but I don't believe news moves the chart. I believe the chart moves bankruptcies do move a chart. So announcing a bankruptcy or a buyout will move the chart. Those are the only two real news items that I really believe moves charts. And for normal stocks, and for biotechs, it's drug approvals and disapprovals. So Paramount looks like it's going down the toilet. XPEV and Dust and BTAI. This is why I see this stuff looks like garbage. Look at that. Just popped down, made a lower low. We can pop down and make another lower low. And zero is just right there. So we're not even far from zero. Riot, probably going to rally right up into the target zone. We found a little resistance at the prior high. 15, 17, 19. That's your upside targets there. FSR, just kind of chugging, Fisker. God, all these EV charts. How many of these companies can do the Tesla thing? Probably not many, if any. There's only one Elon Musk. That dude's made tons of money on PayPal. He's had a consistent history of great ideas and making it into money. You don't hear about the person that runs Fisker at all. You don't hear about the person that runs Rivian at all. So while they can pull a rabbit out of the hat, be careful. All right. Don't chase garbage stuff. Then ultra short silver, that looks like it's about to drop, which means silver's about to pop. I don't know that I would mess with this. Ultra shorts, leverage cuts both ways, and reverse splits are a thing. So be careful chasing that. A lot of these leverage things only do 1 day performance. They're not like a long-term hold situation. So be careful. Be careful. All right, bias for the day. Circle back around, and then we'll get to Discord and continue the conversation over there. So bias for the day at this point, still cautious. Watching those levels that I talked about this morning. First thing, we're watching for this to bounce here. Could bounce up, break above this high, reach up here, and then we'll see what happens. So right now this is holding a potentially bullish pattern, at least to get back up into this 4,400 area. All right. Be careful. All right. That's where we are. We start breaking down these levels, breaking this low and this low. Down she goes. Have support at 4,400. 4,300, 4,250, 4,150. That's kind of the levels, stair stepping on down. I would like to see the pullback, but I also believe in the patterns, and this pattern is showing that we're probably going to come up here, and this may be kind of a corrective thing, and we roll over from there. Not sure. Keep up the conversation in Discord. We'll, if I see something, I'll say something. Otherwise, have a great day, everybody. We'll see you again on Monday, where we go through this all again.